Good morning. We are looking at a reality check on the U.S. economy. I am joined by Hank Greenberg, Chairman and Chief Executive Officer of American International Group, Senator Richard Shelby, Senator from Alabama, Chairman of the Senate Banking, Housing Committee and Urban Affairs Committee, Lawrence Summers, President of Harvard University, formerly Treasury Secretary, John Taylor, U.S. Undersecretary of the Treasury for International Affairs. This week, new figures on the economy were released showing that there was a slowdown in the U.S. economy in the fourth quarter to a rate of 3.1%, down from 4%. The Commerce Department yesterday attributed it to a slowdown in the record trade deficit. Exports down 3.9%, imports up 9%. Having said that, the U.S. economy has clearly worked its way through the 2001 doldrums. Today we will discuss how authorities will transition to higher interest rates against a backdrop of high account deficits, and why the U.S. markets remain nervous despite evidence of the recovery. We'll talk about the twin deficits, a weak dollar, rising interest rates, global relationships, the U.S. regulatory environment, and President Bush's economic policies, and the impact of the growth in China. Let us begin with a brief characterization of where we are right now in the economy. Hank, will you begin us off?
Thanks, Marie. Look, I don't feel bad about the U.S. economy. I think it's actually pretty good. We're growing, as you said, about 3.1%. My guess is that for all of 2005 will be between 3.5%. That's double roughly what Europe is growing. Japan is virtually flat. Inflation is very docile in the United States. And while we talk about higher interest rates, the 10-year Treasury bond hasn't moved very much in the last 12 months. And even if it goes up from 4.15, 4.18, where it currently is, to 4.75, that's not a very big move. And that's what most of the predictions are for 2005. If interest rates do rise in the United States in that range, there probably will be some capital inflows from abroad that will blunt the decline in the U.S. dollar. So I don't see that as a problem. I also believe that, and I don't mean to minimize the current account deficit, it is something that must be ultimately brought under control. That may be also that currency values have to be looked at. If we're going to have a world trading system, you can't have one or two countries pile up all the surplus without having a revaluation of currencies. Well, the failure of that will lead to some protectionism. So, I'm not pessimistic about the U.S. economy.
So you don't think the account imbalance is a short-term problem?
I don't think in the short term it's a problem. I think long term we have to get under control. As far as the budget deficit is concerned, I do hope that Congress will rein in some of the unnecessary spending. I think the President has indicated that, and I'm hopeful that we'll see some movement on that front. We do have to bring the budget deficit down, obviously, and the current account deficit, as I've indicated, is something that's got to be straightened out, and you can only do that if other countries open their markets more and we export more, or you have to revalue currencies to reflect the reality of that fact.
Senator, before you characterize the economy right now, how committed is Congress to reining in the deficit?
I hope we're committed. President Bush is deeply committed. Other than serving on the Banking Committee, I'm also an appropriator. That is, I serve on the Appropriations Committee, and that's where we meet the road, so to speak. And that's where a lot of the restraint has got to come from. But saying it is one thing, doing it's another. We do have that problem. I agree with Hank Greenberg. I believe the economy is, I measure it from 3 years ago. It has come back rather strong, and I think it will be good this year. But the current account deficit and the operating deficit, those are twin dangers out there. They're unsustainable for the long run, maybe for the short haul. But sooner or later, we've got to come to grips with it. I think the first one we could come to grips with is cut our operating deficit, and that's up to the Congress. It's not easy, but it's possible. Something approaching $600 billion a year current account deficit, and $400 or $500 billion, more or less, depends on how you're figuring it, in our operating deficit. That's unsustainable, I believe.
Larry, why don't you talk about the risks that you see with regard to the economy and also characterize where we are right now?
I think very near term the economy is moving forward, and that's good. Very long term, the United States has a capacity for flexibility, for renewal, for technical change that looks very strong relative to the rest of the world. My worry is that medium term we are taking risks that are imprudent for us to be taking by maintaining the twin deficits. 6% of GNP current account deficit. There's always a question when you look at a current account deficit. Is it a sign of strength because capital is pouring into your country, or is it a sign of concern? And it seems to me if you look behind the 6% current account deficit, there's a lot to make you worry. Savings in the United States are down. We have our lowest national savings rate ever. And so the current account deficit is financing consumption, not investment. The flows that are financing the current account deficit are coming in very substantial part not from long-term private sector investments in the United States, but short-term purchases by official agencies and by governments abroad. You look at the composition of investment in the United States. Is it in the export sectors that ultimately will help us service debt, or is it in real estate and the non-traded goods sector of the economy? And it's in the non-traded goods sector of the economy. You look at the movement in the current account deficit, trend is upwards, not downwards. So I think we are taking risks of a substantial disruption in the pattern of economic growth in the United States and globally. Will those risks ever come home to roost? One can't predict with great confidence. Will they come home very soon? Probably not. If you keep taking them, will they eventually catch up with us? I worry that they will. So my hope would be that the next several years we'll see a combination of policy adjustments to produce substantially increased national savings in the United States, policy adjustments that have the effect of switching demand away from the United States and putting increasing demand in the rest of the world, and clearly currencies may have some role in that, and measures to assure substantial growth in demand in the rest of the world. One final comment, Maria. I remember being in Davos in 1997, and there was great enthusiasm for how low interest rates were, how low spreads were, how tranquil markets seemed to be, and how much inflation had fallen. And here we are. And credit spreads have never been lower. So I think it would be helpful if all the actors in the system, public and private, were to remember that there were risks in economic life.
And I will ask you later to look back in history and tell us what that may indicate as far as the account deficit, the account imbalance. John Taylor, why don't you characterize where we are as well?
Well, the U.S. economy is improved tremendously in the last few years. Growth, even with the fourth quarter number you mentioned, Maria, was 4.4% year over year in 2004, and it's projected to continue in the 3 to 4% range next year. We're definitely into the expansion phase, and the recovery has moved along quite well. 2.3 million jobs this last year. And I think if you look into the future of this expansion, there's a lot to be positive about in terms of the longer term. Productivity growth in the United States continues to amaze people, how it continues to be remarkably high. And the fact that inflation is low, and it's not just the United States or countries like the United States where inflation is low. In the mid-90s, the average inflation rate in emerging markets was 65%. Now it's between 5 and 6%. That's an amazing change in the fundamentals that affect stability. So I think when you look around the world and you see spreads being low, it's good news. Volatility being low, it's good news. The fact that there's not one major economy in the world in recession now, the fact that growth in Latin America last year was 5.8%, the fastest growth in 20 years. The fact that growth in emerging Asia is 7.2% last year, and emerging Europe somewhere between 6 and 7%. That is tremendous good news. And I think if you look at the policies that underlie it, there's major improvements. The inflation rate is a good sign. The move towards monetary policies that focus on inflation, flexible exchange rates in countries like Turkey and Brazil. A few years ago, Turkey and Brazil and a number of other countries were threatened by crisis. Now those countries, because of good policies chosen by their leaders, have been performing tremendously. So there's a lot of good things here when you look at the outlook, and it's right. It's important not to look at history and say, well, things were like this before, but to look at the policies that underlie them. And I think there's a tremendous improvement, which we can all be pleased about. Now, there are risks and there are rooms for policy improvement. One of the reasons the U.S. economy has recovered as well as it has despite the major shocks in 2001 is because of the policies in the United States. Monetary policy responded remarkably well. Fiscal policy, the most well-timed tax cuts as I've ever seen as a student of economic history in 2001 and 2003. Get the economy moving. And now that the expansion's underway, a determined policy to reduce the deficit as it should come down during an expansion, be cut in half as the president's desire and commitment. And that indeed will have impacts globally. We think the current account can best be addressed by the international community working together, the United States encouraging saving, private saving, public saving, our partners and our trading partners growing more rapidly. I would be happy if every country in the world grew more rapidly than the United States. I want the United States to grow rapidly as possible too, but this is a win-win situation. This is a problem that can be solved by policies that benefit people around the world by having higher growth. And that's really how we see it.
And monetary policy has been a lot more transparent than ever before. Larry, let me ask you about interest rates and the most recent data. Would you expect that may slow down the Fed's hand with regard to raising interest rates as far as its aggressiveness?
I'm afraid I'm with J.P. Morgan. The only forecast I will make about interest rates is that they will fluctuate.
You sound like Alan Greenspan.
I think it's very difficult to know. Many of us have been surprised by the low level of the 10-year bond yield in the face of a rising Fed funds rate, in the face of substantial budget deficits, in the face of what, as John says, has been a significant recovery, and there's been essentially no movement for well over a year. And when you have a situation of that kind, when an interest rate or an asset price doesn't move in the way you expected it, it's like being at a bus stop and the bus hasn't come. And there are two possibilities. One is there are now three of them around the corner, and what you expected was right, and it's just going to happen later than you thought, more substantially. And the other is that there's something fundamental you don't understand, and the bus isn't running that day. And I don't think any of us can know with complete confidence which way this is going to play out. My sense is that you are taking a risk of a spike when you are as reliant on external finance from a limited number of official actors as we have been in recent years, and therefore I think it's very important that we move to get the budget deficit under control. You know, the United States is the only country in the world, or the only major country, that has a set of systematic 10-year out budget forecasts that everybody can study and analyze and argue about. And that's something we should be proud of, and we shouldn't actually let the fact that we have the estimates and other countries don't mean that we're the only ones who are flagellated. On the other hand, if you look hard within the numbers, you know, there are different estimates for what the costs of Iraq are going to be going forward. But the official sector practice of assuming zero until the emergency appropriation is requested probably isn't the best way to engage in long-term fiscal planning. There are different estimates of what the necessary reforms of the alternative minimum tax down the road are, but assuming zero is probably not a very plausible estimate for thinking about it. There's a certain disingenuousness on the part of those who say the 10-year budget target doesn't look so bad right now, but also say that we need to extend the tax cuts as soon as possible beyond 2010. And so I think if you look at the numbers in a realistic way, it is actually not so easy to see the halving of the deficit, even on the basis of the more adventurous of the policies that are proposed. And none of us know where the Social Security discussion is going to go, and there's a certain amount of what I'll call rhetorical energy on both sides. But there hasn't been much suggested yet that's got the prospect of making the fiscal situation better over the next 10 to 15 years. And there's been a certain amount suggested that would make it worse. So I am worried about the prospect. But again, it's a matter of risks, and anybody who tells you for sure they know which way it's going to go probably is making a mistake.
Yeah, I'd like you all really to weigh in on all of the topics you discussed. You hit on a lot of issues, but Senator, why don't you give us your take on the Social Security privatization? Do you support it?
That's a very complex question, and it's. I was talking to some people the other day in the Senate, and I think a lot of people are keeping their powder dry. They realize that is a large rock to roll up a hill. We'll have to see what happens. A lot of the people.
What are you waiting to see?
A lot of people in the Republican caucus are a little nervous about it. We don't know the details. We'd like to see them. They'll be coming, we hope, soon. But I've seen some polls in America recently, and they don't look good as far as rolling that rock up the hill. But things change.
As far as the comments that Larry was making with regard to interest rates, tell me if what is on your committee's agenda with regard to rates and the issue of the weak dollar over the next 2 years?
Well, the number one issue that we're going to confront early on is what are we going to do about the GSEs, the government-sponsored enterprise, Fannie Mae, Freddie Mac, and the Federal Home Loan Bank. We all are familiar with the recent accounting debacle at Fannie Mae, a $9 billion restatement. Now, many companies, Hank, in the world would still be standing, with that. Freddie Mac had their problems a year or so ago. Instead of going, when they restated, they went up instead of down, but they still had accounting problems. I believe that we've got to have a receivership in legislation. We've got to have product approval, and we've got to have a regulator that can set higher capital standards. I don't know of any financial institution, and I've been on the banking committee a long time, that has gone under if they were well capitalized, well managed, and well regulated. And GSEs are GSEs. They do have a role, I believe. Some people believe otherwise. Some people believe they've outlived their usefulness. But I think we're in the best position to pass meaningful legislation, but we'll have to do it. We will start our hearings in early February. It will be be an interesting session.
Certainly want to get your take on that, Larry. I know you focused on that quite a bit while in office. But first, John Taylor, let's hear from you. Are you worried about the impact of the GSE's position right now on the economy?
Well, I think it's one of the problems we have to address, and the Senator just indicated some excellent ideas. But I also, as we go to your question about Social Security and some of the other policy initiatives that are coming up, as you know, President Bush has put forth some principles, and one of the principles is the creation of personal accounts. It's a very important on his list of principles to pursue. It would be very important for the United States to move in that direction. But Social Security is one of the problems that we have to address. In the longer term, there's an imbalance. That's an imbalance that has to be adjusted, and we're going to work towards that. And Senator Shelby will be working a lot in that in the next few months. The President is committed to that. But also tax reform. There's a commission that has been established to make recommendations on tax reform. It's another issue the President wants to handle. There's lots of issues that can be made better by trying to enact and find a way those proposals and go through. And then another issue which is very important to the Bush administration is what we call tort reform. There's still a lot of costs of doing business, costs especially in the medical profession because of the risks of frivolous lawsuits, et cetera. So trying to deal with the tort problem in the United States is another big one to handle. And I think the President is very committed to these policies and moving ahead and working with the Congress. And when it's on the international sphere, as I indicated, cooperating on things like these imbalances, very anxious to work cooperatively on financial diplomacy, if you like, so we can continue to get things done well on the international sphere.
Hank, I know you have an opinion on tort reform.
I'd like to comment on the GSEs. I went to see Larry Summer when he was Secretary of the Treasury on the GSEs. The GSEs have an implied guarantee from the U.S. government, and as a result, they have a AAA rating with capital requirements that are much lower than the private sector would have. They pay no state taxes, so they compete with the private sector on an unfair playing field. And I think we'd be better off if they were totally privatized and competed like all other private companies do in the marketplace. I think what was happening was an accident that was going to occur, and indeed it did. We were out on front on that several years ago. And so I do hope that when it's being discussed, Senator, that let's put the playing field on a level basis. With respect to tort reform, Maria, clearly it's something that the country desperately needs. The President has been very vocal about it. I think that class action was voted out of committee the other day. I hope that it will receive approval on the Senate floor. The issue, it's a very important issue to the country. I think we spend about 3% of GDP virtually on tort issues in the country. It's devastating. And I think that if we don't get it under control, it's going to have a very major impact, greater than it currently does on the economy. Asbestos is the second one. My own view is that a trust fund idea is the wrong approach. There are too many stakeholders who you can't get together to agree on what should be done. The defendants want one thing, the trial bar another, the claimants another, and the insurance industry yet something different. So it's very difficult to get them to agree on that. They were talking about a trust fund of $140 billion, and that would not even be finality. When that ran out of money, you'd be back into the tort system. So very few people now are signing on to that. The simplest solution to the asbestos problem, and one which we've been advocating and others for some time, is medical criteria to take care of those who are truly ill. Most of the claimants are not ill. They have no evidence of any illness. It may occur in the future, but right now they don't. So medical criteria, a single jurisdiction, a federal jurisdiction, and a cap on legal fees. If we did those three things, we'd save about 40% of the cost of asbestos. And finally, medical malpractice. We desperately need reform. Many doctors, physicians, and specialists are leaving the practice simply because they can't afford medical malpractice insurance. It's wrong for the country. We need to bring about some reforms. I hope we can get it done.
At the risk of jumping around too much, let's stay on this. Senator, what is the chance of tort reform passing in the Congress?
I think the chances of certain pieces of tort reform passing are a lot better than they were last year. I think the president has put that close to the top of his agenda. I think the environment has changed a lot. I want to reference asbestos just a minute. Asbestos alone has all the claims. They put a lot of companies, good companies, into bankruptcy. And I think, I don't know whether we'll have a trust fund approach there or what we'll do, but I think something's going to happen this year. I don't know about medical malpractice. Some of the people around the country, they said, well, let's leave that up to the states. You know, my state of Alabama was the claimed to be the tort capital of the world 10, 12 years ago. Maurice and Hank Greenberg knows that. But what we did, we changed the composition of the Supreme Court of Alabama. We now have 9 Republicans sitting on the Supreme Court. It was 9 Democrats before, and believe me, it has made a difference.
Sure has.
Larry, why don't you speak to the senator and talk about what you have looked at in the past with regard to the GSEs as he focuses on this number one on his agenda.
I think I won't rise to the last of Senator Shelby's comments beyond saying that I think most people who are thoughtful, who look at the issues of torts, asbestos, and medical malpractice, think that we need to go somewhere from where we are now that's different. I think most people who look at all 3 of those systems see the amount of money that the victims get, and they see the amount of money that those who are claimed against pay, and they see a very big wedge in between, and think we've got to find ways to reduce that wedge. And I think the instinct there is absolutely right. My own view is we need to be very careful as we do that to make sure that the victims are getting the help that we need, and to also make sure that the professions are being policed. And I would hope that whatever's done in medical malpractice would also come with substantial efforts to assure that doctors who are malpracticing are not allowed to continue to practice. And that's an area where, frankly, there have been some flaws in the system. On the GSEs, look, I think there's one thing that is important for all 3 of us here to say. There are some serious issues in that sphere, but there is nothing in anything I have heard or anything I have seen to suggest that there is any kind of imminent danger in any way, shape, or form to the securities of those institutions. I think the question goes rather to what is a healthy policy for having a capital market, and how you function in a capital market in which certain institutions have a particular kind of proximity to the government. And I think the concerns that point to assuring strong regulation, assuring adequate capitalization, and controlling moral hazards are very much the right kind of concerns, and I think they're things that, in retrospect, it would have been desirable to have addressed earlier, and my hope is that we can address in a really quite effective way going forward. But again, balance is essential. No one wants to scale back the nation's commitment to housing. No one wants to disrupt anything that's ongoing in today's capital markets, but I think there are a number of good ideas out there for making the situation better.
John Taylor, with respect to the privatization of Social Security, where will the money come from? I hear all of you talking about the need to cut the twin deficits, and yet estimates call for this plan to cost $2 trillion. Well, how much would you expect it to cost, first of all?
Well, it depends on which plan goes forward and how much it is, but the
But we are
idea of
talking
having...
about the trillions.
Well, it depends on what size the accounts are and how they're phased in, which are details which have yet to be laid out and discussed. But right now, the notion of having personal accounts is one that's an important part of the reform. It can be done in a way that is smooth. And remember, if the reform is done in the right way, there doesn't need to be an increase in the liabilities of the United States government. On the contrary, we want to reduce the unfunded liabilities. Right now, the unfunded liabilities are much too large, and that's a long-term problem that's, as we get closer and closer to the long term, we need to make sure we address. There's a question about how rapidly you need to address problems like this. Talking about the GSEs, well, maybe it's not a problem today, but this is the time to address it before it does become a problem. Same with Social Security. This is the time to address it. The President is committed to it, and it's clear there's a problem, and personal accounts are part of the solution.
Hank?
We'll be... Go ahead, Mr.
No, go ahead.
We'll be looking for a lot of the details. Dr. Taylor knows that the President's been talking about principles, and as I said earlier, a lot of us are anxious, perhaps a little too anxious at times. We know that down the road we're going to have some problems with Social Security funding. I mean, let's look at the actuarial tables. It's a question, can we politically, again, roll that rock up the hill? We'll have to see. I'm listening to the administration. A lot of people are waiting to.
You know, projecting 75 years in advance is a fairly arcane process to determine whether or not any minor movement in that projection for 75 years will change the outcome dramatically. You know, it's very difficult for the government to project their budget 1 year in advance. To say 75 years can be done with precision, I think is somewhat exaggerated. But let's assume the moment you're going to do that, and you want to have private accounts, which I'm not sure is or isn't a good idea yet. But certainly it ought not to be individual accounts where everybody decides how they want to invest. The cost of that administratively would be overwhelming. So if there was a broad-based index fund, very minor expense, and if there was a percentage of the private account, assuming it was 4%, and it was a half or 1% or something even less, that provided an insurance program that guaranteed the principal to the recipient, that would certainly be worth thinking about. Because I do think that during the period of a person's retirement, about to retire, if that index is down, they're going to suffer. So you have to at least provide some kind of floor under that investment if we're going to go that route.
Here's maybe a way of thinking about the Social Security problem that maybe gets at some of the fundamental aspects. Right now, people put aside a certain amount of money from their paychecks, and their employers put aside a certain amount of money from their paychecks, and they're promised a certain stream of benefits in the future. And all the best guesses now, recognizing that one can't know, is that the stream of money that's going to be put aside for the future, put aside from paychecks, is less than the stream of money that people have been promised in the future. Now, calling some of that money a contribution to a trust fund or calling some of that money a personal or private account doesn't basically change the reality that the benefits people have ahead of them right now are less than what we're paying for as a society. And the difficulty is that you can make it politically attractive by saying it's going to be a much better deal for people, or you can make it accounting sound by somehow bringing those two things together. but it's pretty hard to do both at the same time. And that's why a certain amount of confusion is surrounding this debate. The instincts that we had in the 1990s were very much along the lines of one thing John said, that, as President Clinton used to say, you should fix the roof while the sun is shining. But our focus was on taking resources from the surplus and contributing those to help build up the Social Security system for the future. And our focus was on the possibility of various kinds of add-ons to Social Security in which individuals made additional contributions beyond their Social Security, their current Social Security taxes. So we were putting more aside as a society and saving more to prepare for the future. But those two elements, budget surpluses and add-ons, seem to have fallen a bit out of the debate. And if you're sticking with the current payroll tax, and you're sticking with the current promised benefit, and you're sticking with benefit levels right now, my guess is that it's going to be hard to square the politics and the economics.
One thing, I think it's important, as Larry was indicating, to try to communicate that there's a great deal of consensus about what the problem is. It's almost a matter of arithmetic. Of course, there's some projections, but just the fact that in 1950 there were 16 workers for each retiree. Now there's about a little over 3, and there's projected to be 2. Just tells you that the arithmetic is going to require some adjustments no matter what the forecast. So it is important. I think it's important to get the consensus about what the problem is, and what the president has done is laid out some principles, and that's the place to begin a dialogue with the principles, and that's why we're taking that approach at this time. And ultimately, through the discussion, when there is agreement about the nature of the problem, as usual, at least it's my experience, when people understand the problem, then the kind of solutions that can deal with it become much more easy to get to.
I just want to add, there's more than just a little political connection here. I believe before we do anything, and I've told some people in the administration this, and I hope the president will be able to do this and others, you've got to reassure in a big, big way the seniors in America that are drawing Social Security and those that are about to draw Social Security that this is the right way to go for a lot of reasons. One, they're the most, they're the heaviest voting bloc. Both parties know that. We're very mindful of what's going to happen to the fund with the baby boomers coming on. We're mindful of the people 25 years of age, too, starting into the market, which are real concerns. The question, can we tune that politically? We're going to have to see. I think it's a slippery slope.
Let's switch gears to the global environment and the U.S. relative to our international counterparts. John, you've been talking a lot about a recovery throughout Latin America. I do want to certainly get into China and the risks and rewards there, but let me begin with anti-Americanism. Hank, you travel, all of you actually, but how fervent is anti-Americanism at this point?
You know, from a point of view of business, we haven't detected any in the business community, at least in our own company. And I travel extensively, and I've had obviously complaints about some U.S. policies, but it hasn't reflected on our business. It hasn't. Our business has grown in every country in which we do business. But you know, I'd be less than honest if I didn't say that some of the policies that have been advocated by the administration have caused some anti-American feelings. That's a reality. But from a business point of view, it hasn't affected us.
Senator, we've seen some concerns about foreign companies complying with the Sarbanes-Oxley 404. Bill Donaldson recently talked about easing those restrictions a bit, giving foreign companies a little more time to comply. Where do you stand on 404 and the difficulties that have arisen on the part of corporate America?
First of all, I think you have to accept there are some difficulties there. That has been raised. We've had 2 oversight hearings in the Banking Committee on Sarbanes-Oxley. We will have another when I talked with Chairman Donaldson. He's here, of course, and yesterday that was raised in another panel I was on. He indicated that if there's some real problems there, and he didn't acknowledge that there were, that he thought they could deal with that by regulation. We'll have to see, but we will have a hearing. We want people that are aggrieved to come to the Banking Committee to be balanced, because if there's some tweaking that we need to do it.
Larry, where do you stand on the regulatory environment and what we've seen over the last 2 years? I want to get back to the international scene, but while we're here, tell me about your opinions on whether or not the pendulum has swung too far in one direction.
You know, I'm not as close to the regulatory issues anymore as I once was. My guess is that the pendulum you can't generalize about all regulation and say the pendulum swung too far one way or too far the other way. I think there probably are some areas where regulation's having a chilling effect. I think there's some other areas where we probably need more regulation. Frankly, on the scale of problems facing us or facing even our financial system going forward, my own view would be that the issues around better regulation, as important as they are probably small relative to the issues around the way in which America is seen in the world. And I think that is something that requires a good deal of soul searching on all our parts, on the part of Americans, American policymakers, both with respect to the substance of policy and with respect to the style of policy. Those of us in private life whose actions inevitably influence the way in which America is seen. Those who are friendly to America abroad and benefit in a variety of ways from the American security umbrella. I think there's a great need for reflection on all of this, and I think there have been some very important issues thrown up by the events of the last several years, and truly that have taken this to a new level. But I think it would be a mistake to think that this isn't also an important structural issue of the post-Cold War world.
But has it impacted foreigners doing business in this country, listing in this country, in the United States?
I don't. There are others on this panel who know much more about listing. I can tell you that I have been troubled by the degree to which visa restrictions and signals sent by the actions of our consulates and others have inhibited people from pursuing degrees in the United States. I think that situation, which was very, very serious a year and a half ago, is getting better thanks to really good efforts by Colin Powell and a number of others. But I think that this question of openness and bringing people to America's universities is something that's profoundly important for the future, because I think the students who come bring a great deal to our country and economy, and I think the many, many students who return are very much influenced by their time in the United States, and so that's a very, very important thing for us as a country to do, as it's a very important thing to do what we're doing at Harvard, which is to make sure that as many students as possible from the United States at a moment when they are young and in a position to be formed and influenced have a significant experience abroad, because I think the United States needs to understand the rest of the world much better.
I used to be a professor, and I know what Larry's referring to in terms of such a great benefits from exchanges of young people, and I appreciate his leadership in trying to move this forward. And I think there has been some improvements in the last year and a half, but we very much want to emphasize the openness of America and our traditions. I think in terms of your questions about anti-Americanism, Maria, from the sphere I deal with, which is the financial side, it's not the business side of the financing, but it's the government. we see a lot of cooperation when people get down and roll up their sleeves. I mean, one of the best examples of international cooperation I've ever seen is how in the last few years governments have come together and tried to combat the financing of terror. It's been a huge multilateral effort. It began with the G7. It spread to the G20. G20 is a group that began when Larry was at the Treasury. It's an expansion of the G7. I think that right now there's a new grouping. One of the most exciting developments in international cooperation is between the G8 and the broader Middle East, North African countries. A Forum for the Future meeting took place in Rabat. In December, there's going to be another one in Bahrain. It's encouraging economic freedom and political freedom in these countries where the G8, all the G8 countries can participate and help out and work together. And there you have France and America completely on the same page on that. And then with respect to just emphasizing some of the things that America does, I think it's important as part of the answer here to get out the information. For example, in the last 4 years, our official foreign assistance to poor countries nearly doubled from $10 billion to $19 billion per year. Our aid to Africa from the United States has more than quadrupled in that period. In 2000, U.S. assistance to Africa was $1.1 billion. In 2004, it was $4.6 billion. So these are kind of the facts and the details of what's actually happening. I think the more that we can communicate and work together, I think the better off we'll be on these areas.
Let me move on to China. Hank, I saw you give the executive premier of China a big embrace earlier. Your company has been there since 1919. What are the risks? Not you, but the company.
Company started in China in 1919. We didn't have an unbroken record. We left for quite a while. I went back for the first time in 1975. And it took from 1975 to 1992 to get our first license. Look, China is everybody knows, has grown dramatically. They now have over 600 billion of reserves, huge reserves, second in the world, I believe, after Japan. And foreign investment continues to flood into China. China is using those reserves in many different ways. They are buying up commodities around the world, companies which include oil. It may go on in other areas. The strange thing is most of their trade surplus is with the U.S. With the rest of the world, it's about even. But we have a huge trade current account deficit with China, and I don't see any signs that that's going to diminish very soon. The question is, and it's been a nagging question for some time, will China revalue the RMB, their currency, which obviously it's been pegged to the dollar, and it's been very advantageous to them to do that. But you can't continue to have a current account deficit, a trade deficit, with China growing at the rate it's been growing without having something change. And so I think sooner rather than later, have got to consider revaluing the RMB. Moreover, while China is now a member of WTO, there are a number of things they can do to mitigate the trade deficit. One is to open their markets wider and faster beyond the commitments that they've made to WTO. That would be very helpful. So it is a powerful and growing economy, and if on the track that it's on, I think that it won't be many years it's going to challenge most economies in the world for supremacy.
And can that powerful growth continue, John, without overheating and making the adjustments that Hank is talking about?
Well, it's very important for China to be sure that inflation doesn't continue to pick up and become a problem. Well, one of the reasons why we've had so much more stability around the world is that countries have improved greatly in their ability to contain inflation. And part of that has been through the use of flexible exchange rates. So right now, China is, of course, trying to prevent inflation from picking up and trying to prevent overheating. To do that, they have to make the adjustments in monetary policy. They've tried to use administrative measures. They work sometimes, but they're also very blunt instruments. So using monetary policy is really the way they would like to proceed, and that means moving to a flexible exchange rate. And the entire G7 has urged them to do that in a very together diplomatic way. And we see the steps that are being taken to do so. Technical cooperation agreements with the United States and other countries, memorandum of understanding with the Chicago Mercantile Exchange to set up futures markets, which is the kind of thing you would find attractive in the case of a flexible exchange rate. So the steps are being taken, and we think it's an important evolving towards a more market economy that China really wants to pursue, and that will be better for the world economy as well as for China and for the adjustment of these imbalances.
Do any of you expect China to be more aggressive in terms of being an acquirer of foreign companies, given its enormous demand for commodities, oil included?
I think it's a real possibility. You've seen recently that a Chinese technology company acquired, in the midst of acquiring, a U.S. technology company. I think it was a subsidiary of IBM. I would not be surprised. It's one way for them to acquire knowledge and experience and management skills more rapidly. It would not surprise me to see that occur.
How does the administration view that? Well, John, tell me the administration's view of perhaps if we were to see acquisitions from China, particularly American companies.
Let me say, in most general terms, the United States wants to continue to be an attractive place for foreign investment. We have had an open investment approach to policy for many, many years. With respect to the particular transactions now, I actually cannot comment at all, but in general terms, I think it's very important to maintain that open investment approach.
Here's some.
Go ahead. If I could, he referenced the possible acquisition of an American company by the Chinese. Some national security issues have been raised on that. I don't know what would be the outcome, but several of my colleagues in the House have pitched it pretty high right now. John, you might have a view on that.
Well, quite frankly, Senator, I cannot talk about this issue.
Here's maybe a way to step back slightly from a bit of this, maybe, and think about this. There's a country with a complex financial system in which the government plays a substantial role. Its economy's been growing very rapidly. There's increasing concern about the geostrategic aspects of its economic growth, including its acquisitions in the United States. The country has very considerable concern about letting its currency appreciate too much against the dollar. That's having a substantial influence on its monetary policy and is setting off various kinds of inflationary pressures, particularly in asset markets. The financial system is complex in its ability to respond to those increases in asset markets. There are land bubbles in the major cities, which are hotspots. It sounds rather like China today. It also sounds a lot like Japan in the late 1980s, where there was a similar kind of concern about what happened vis-a-vis the dollar, a similar kind of rising economic power, and the policy adjustments in retrospect were not handled ideally. Exchange rate flexibility was insufficient and too late. There were a number of failures in the regulatory policy side. Some of the more alarmist concerns externally appear to have been unwarranted ex post. And I think the analogy, while it's flawed in many respects, is worth thinking about as one thinks about Chinese monetary policy going forward.
Let me open it up to questions from the audience. Yes, sir. Is there a microphone? It's coming.
My name is Carter Dougherty with the International Herald Tribune. I had a question for Mr. Taylor, because you've spoken repeatedly that the Bush administration is in the phase of talking about principles for Social Security reform. And we've sort of danced around this subject, but so I'd just like to pose the question directly. Is one of those principles that this reform should remain revenue neutral and not further exacerbate the budget deficit?
Well, one of the goals, of course, and one of the purposes of the reform is to try to reduce the amount of unfunded liabilities, which are large and will grow each day we don't address the problem. So that certainly is a goal of the whole initiative here, is to address that problem.
Steve Roach at Morgan Stanley. Mr. Taylor, just go back to your academic days. What would the so-called Taylor's rule tell you that the appropriate level of the federal funds rate should be today?
Well, one of the problems with academic contributions is once they're done, they go out there and you can't do much about them. And so, quite frankly, I don't really pay a lot of attention now, given my other responsibilities, to the exact readings of the Taylor rule. What I do know, it has provided a very useful icebreaker for conversations with many foreign officials around the world, because it's amazing how much attention is paid to I would say the principles that underlie that, rather than the specific formulas. So I think you don't want to pay too much attention right now to the specific readings of rules like that, because it depends on your estimate of inflation, your estimate of potential GDP. But the principles that central banks should focus on price stability, should raise interest rates or lower interest rates by a sufficient amount to get the price stability goal, to the extent that they should be changing interest rates according to what's happening in the real economy, whether the economy is strong or weak, and that's an important part of monetary policy. Those principles, I think, are described by rules like that. But more and more, fortunately, they're being used in constructive ways, in different ways, by monetary policymakers. So I think it's been constructive, but I wouldn't focus on a particular reading at a particular date.
Richard Layard, London School of Economics. Isn't the social security problem best addressed by having people work longer? If it's being caused by people being healthier, surely the obvious response is to take advantage of the fact that they are healthier.
Well, I think that's probably a general question for the panel, but let me just indicate, I think that as people do live longer and can enjoy life longer, there are a lot of rewards to working longer in many cases. And I think as we talk about reforms of Social Security, we ought to be thinking about some of the benefits that the longer life brings, and it's a pleasure. I mean, I'm getting there real soon. I'm looking to continue. My parents, grandparents. It's just something we need to focus on. So it's not a negative. I don't think it's a negative, but we ought to be thinking more generally about the potential advantages that the technology is bringing us, and how our Social Security reforms take advantage of that.
I believe we all know we're living longer. We have better health opportunities. I think the Social Security number that we have now for retirement is probably too low. It was based long ago. We're trying to adjust it a little. We probably need to look at it real carefully, and especially for the future. It would help a lot.
I would agree, and by the way, Richard, it's built into current law that there are a set of upwards adjustments in the retirement age. But I think this is going to call for some fairly far-reaching changes in the way organizations work, because there's a tendency, and here I'm particularly thinking on the white-collar side, for there to be a sense the longer you're at an institution, you're always moving up and up and up the hierarchy, up and up and up the hierarchy. And if, as people are having longer careers, there may be many people for whom continuing to work until they're 70 or 75 is appropriate, but where it may not be appropriate for their point of maximum responsibility to be reached just before they retire. And that's going to require some cultural adjustments and some thinking about how businesses are structured if we're going to achieve those kinds of objectives.
Bill Price, Texas Pacific Group. We've been noticing in a lot of our companies that healthcare costs are again accelerating at a dramatic pace. We haven't talked about that or the disparities in the level of healthcare available to Americans. What's the chance either of these issues are going to be addressed legislatively this year?
Well, that's a good question, a tough question. We've got great challenges with Medicare and Medicaid. Just about every state's got the real challenge of Medicaid matching the growth there. The growth in both programs they're just the fastest growing programs that we have in the United States. Can we adjust it? We've tried on the pharmaceutical end. I think we realize now, some of us thought then, that maybe the numbers were lowballed to begin with. It seems there's no end in sight. That's a tough thing to do politically, but economically, and we have some economists up here, they know that the numbers game will overtake you.
We need to do a better job on health, on preventive issues, which would reduce the health care costs in the United States dramatically. That is something that needs to be done, and it really hasn't really done very much yet.
Rakesh Khurana from the Harvard Business School. This question is for Mr. Greenberg. As a corporate chief executive, do you worry that the sort of private accounts and Social Security will result in sort of a quasi-greater involvement of the government in corporate governance? Even broad-based index funds like CalPERS seem to have taken a very active role in governing companies, and it would seem that one possible unintended consequence of greater involvement of the general public would be an expectation that the government play a greater role in governance, and would that have negative consequences?
Well, it's possible, but I don't think so. I think that government is involved in so many things we do in any event. I don't think that a private account that we're talking about, roughly $1,600 a year, is going to cut into the major retirement savings business we're in, for example. I think if it goes in any way, I think the only possible way would be an index fund. That would make sense to me. Now, it doesn't mean that politically that will happen, but I'm not too concerned about it. I'm concerned about other factors where government intrudes in business, but that's an entirely different story.
Any other questions? As we wrap up, let me just conclude with some of the things that came out of this panel. It appears the account imbalance and budget deficit need to be watched. You all agree that these are two of the most important issues that the U.S. economy is facing. The panel is optimistic about the growth in the U.S. economy. Productivity strong, inflation low. It doesn't seem that any of you expect interest rates, though, to soar anytime soon. Anti-Americanism is not an issue. It is a non-issue when it comes to business. China, very important to watch. Some of you are questioning whether or not the expansion can continue without some adjustments being made. The GSEs status, very important, number one on Senator Shelby's agenda. Tort reform, equally as important, and it sounds like has a very good chance of passage. We are waiting for more details on Social Security and tax reform. Let me end with one question for each of you. What is the single biggest threat to the U.S. economy today? John Taylor.
I think that we have longer term to address the problems that I mentioned. And it's a longer term issue, but we need to address them now. And that's what I want to get done, work with the Congress and the President to move ahead on.
Larry Summers.
Can't resist, too. The terror oil spike nexus first, and a hard landing around dollar and debt second.
Does it concern you that central banks have boosted their holdings in euros and have sold dollars? I know you said there was nothing new in that recent survey, but is that a concern to you?
I'm more worried about the uncertainties and risks in the future than I am about anything that's happened so far, but I want to use the phrase worry rather than predict, because I think it's very much something that we can be constructive and address.
Has the dollar weakness been warranted?
Old Secretary of the Treasury habits die hard. I think a strong dollar is very much in the U.S. interest.
Senator.
I believe that our challenge short term and long term will be energy. We've got to come to grips with it. There could be, as Larry said, there could be a short-term spike. I hope not. There could be a danger out there, but long-term, we know, and also Europe has the same problem. We've got energy challenges big time.
I think most of the important things have been touched on, but I would say that for the very short term, in the next several months in the United States, if we don't pass TRIA, renew TRIA, which provides terrorist reinsurance for the insurance industry, you're going to see construction come to a halt. You're going to see banks very concerned. It's an economic problem rather than an insurance problem.
We're going to address that in the banking committee. I didn't mention it earlier. Treasury is supposed to have a report to us. We will probably have a hearing before we hear from Treasury, because I agree that it is an important issue, and there are a lot of anxious people in the business community waiting to see what we do.
I'm sorry, Hank, we discussed this earlier, and apparently Jon Snow has made comments that the administration is likely not in favor of reinsurance for terrorism.
Well, we're going to see, but we're going to have our own hearing and see how the Senate what the Senate thinks about it too.
Gentlemen, thank you. Thank you, everybody.
Thank you.